We continue to follow some breaking news that's developing today as the inflation numbers remain stuck really above the Federal Reserve's target rate of 2%. We got PCE numbers today, the personal consumption expenditure. This is the Fed's preferred gauge, showing that things held steady around 3.3% inflation in April. That is a 3-year high, though, year over year, 3.3% inflation, according to the PCE. This comes as uncertainty over tariffs and global tensions continue to cloud the economic outlook. We've got an expert, though, to break all of these numbers down for us and condense them in a way that you can understand. You and I, really. We're joined now by Dr. Saloni Vastani of the Emory University's Goizueta School of Business. Dr. Vastani, welcome.
Thank you, Joe.
So first off, I just wanted to ask you right off the bat your key takeaways from the PCE numbers here.
Yeah, so this month we saw the year-over-year PCE numbers increase by 3.8%, higher than March's rate of 3.5%. So you see them overall trending higher. And then the month-over-month increase was a little bit smaller at 0.4% versus March's rate of 0.7% over February.
Dr. Vastani, a lot of factors go into play when we talk about why we are seeing inflation on the rise. But what stands out to you, and why do you think we are seeing inflation really on the rise month over month?
Yeah, energy prices are sort of driving some of this. And overall, when energy prices go up, you're not only seeing it at the fuel pump, you're seeing it across the board because the transportation costs are higher to get things to the grocery store and other retail outlets. So you're seeing that sort of domino effect of everything kind of trickle up.
Yeah, energy plays so much of a role in our prices, how much we pay for things like groceries, right? Trucks have to deliver that. You've got freight costs as well. And oh, by the way, speaking of energy, we've got a war in Iran going on. The Strait of Hormuz remains closed at this point as, leaders in Washington, D.C. and around the world try to broker a peace and a ceasefire throughout all this to open, hopefully, the Strait of Hormuz soon. We've got gas prices on the rise, nearing that $4 a gallon mark. We're seeing Georgia having to put mitigation efforts in place, like suspending the gas tax to ease consumers' fears and anxiety over the economy. Companies also are, anxious during this time, Dr. Vastani. How do you think companies are viewing these numbers as they stand today?
Yeah, so companies are trying to make a decision about how to incorporate these numbers, and really are looking at broad three options that they consider. One is to absorb the numbers and increase the prices to the consumer. Just the second option is not to do anything and just have lower profits. And the third is to do something in between, right? And given that this is a shorter term horizon, you're seeing sort of different approaches come through depending upon the industry. So, for example, the airlines have taken this and said, okay, you know what, it's a big fuel cost is a big part of our overall expenditure. So we are going to sort of increase prices to the consumers. Whereas if it's a small percentage of your overall spending, you may want to not do that and translate that to the consumers just yet. So depending upon where companies are, they're having sort of different approaches, but everyone's watching it really closely and really paying attention to this, so that their year-over-year profitability and numbers sort of stay aligned with what's going on.
Sure. We know things are already pretty tight for consumers right now. Just looking at the numbers here, data showing personal savings rate has dropped to its lowest in nearly 4 years. So consumers are relying a lot more on their savings, right? What may be left of them, relying more on credit cards and building that debt, especially seeing the increase month over month and year over year in inflation. What are the long-term effects if inflation doesn't cool down and stays quite sticky like we're seeing now?
Yeah, so the long-term effects are exactly what you were saying, Joe, is like You're going to see a depletion of savings, then luxury goods spendings, more need-based spending, also switching to more cheaper options, whether it is consumer goods moving from branded to private equity, or making different choices in life for lodging and things like that. And so people are making those trade-offs. You also have the long-term effects of this sort of on income, right, of people, and how does this continued inflation push up labor wages? Because many of the year-over-year increases are tied to inflation. So that creates sort of a domino cycle as prices go up. And if minimum wage is to go up, how does that sort of trickle in into the economy is a big, a sort of complicated algorithm right there.
Yeah, interesting you mention labor wages, Dr. Vastani, because the Federal Reserve has a big decision to make, right? As they are
Mhm.
charged with keeping prices stable when you talk about inflation rates, and also the unemployment rate, making sure that employment is stable as well and that our economy is humming along. But when you think about where inflation is right now, we've got a new Fed chair now, in Kevin Warsh, that just took the bench there at the Fed. We've seen that Jerome Powell has held steady. There hasn't really been much action taken, but if you see inflation continue at the pace it's on, will the Fed have really a choice but to raise interest rates to try and combat inflation?
So that's been the most standard policy that the Fed has followed to combat inflation, is to um, manage interest rates. It'll be interesting to see if that's taken in the same stride or taken sort of differently in terms of how they use inflation numbers. Um, and I think I've heard about some different strategies on calculating inflation numbers to better manage. I think in general, the Fed tries to keep inflation to about 2%. That's a happy place. That's where we are always trying to move towards. Does that change to a different number? Or do we calculate the number the same way as we've done in the past? Will all depend on the new leadership.
And we know that the Federal Open Market Committee next meets just a couple of weeks, June 16th and 17th. The big question is what will happen with interest rates? Will they hold steady? Will they go up? Or might there be a rate cut? We will see. Dr. Saloni Vastani with us from Emory University's Goizueta School. Thanks so much for your time.
I thank you for having me.